Welcome back to another episode of Income Insider TV. And today's guest is Devlyn Steele, the Director of Education at Augusta Precious Metals. With more than 4 decades of experience across finance, technology, and economic analysis, Devlyn has spent years studying forces that shape the dollar, that shape inflation, the Federal Reserve policy, and the role of assets like gold and silver. And so today we are going to talk about why so many people who, when nearing retirement, tend to feel uneasy at this point in time. Beneath the headlines about market swings, inflation, and uncertainty is often a deeper question that many Americans are asking. Does the retirement future they plan for still feel secure? And so today we will explore what might be driving that concern, what people are feeling, and why more savers are seeking education and alternatives. Now, a quick disclaimer before we get started. This is not financial, not tax or legal advice. Everyone's situation is different, so please speak with a qualified professional before making changes to your savings or your retirement accounts. So now that that's out of the way, Devlyn, welcome to Income Insider TV.
Thank you so much for having me here.
Yeah, we are ready for you to put some of our fears at rest, or at least acknowledge why we might be feeling this way. So, to start us off, why do you think people are feeling so uneasy when they're looking at their retirement plan right now?
When it comes to retirement and the retirement that people want to have, the basis of it is all built around your financing lasting for the time that you're not working. And when we talk about finance lasting, we're really talking about lifestyle lasting, because it's not just about the dollars you have, it's what they're going to buy. And can they maintain your life in your home? Will you be able to travel? Will you be able to do things for your kids? What about health costs? What's going to happen once you start working? Will your money last? And over 60% of Americans fear outliving their money. They think it's not going to go to the end. And there's good reason for that, because we see what's happening with prices and inflation and market shocks. And so people that I speak to on a regular basis are generally worried.
And paint us more of a picture on that. What exactly are they worried about? Like, what are you hearing specifically? And is this unique? This is another thing I wonder. Like, is this how everybody feels when they come to retirement? Or is this like a special moment in time where you're really feeling this from people who are getting close to that phase of life?
I think throughout history, people have felt this at different periods because we've had wars and oil shocks and inflation and other periods of time. But for a while now, things have felt more stable. They felt like things were getting better. And then we hit COVID and we printed so much money. And even though the Federal Reserve said it was transitory, it wasn't, because I can explain why it wasn't transitory. But inflation had too many dollars chasing too few goods, and we just saw prices rising and rising and rising. And we were hoping with this new administration, a lot of people were thinking economic controls would come in. And then what they've been experiencing for the past 4 years from COVID through 24, 25 and 26 came in and nothing changed. Inflation kept going. Market volatility kept going up and down, up and down. And we started to develop what's called a K-shaped economy. And if you think about the letter K, one side of the K goes up and one side goes down. And what the middle class was experiencing was that everything was getting tougher and tougher for them. For the wealthy, they were making more and more and more. So some people were very happy, but for people worried about retirement, they saw things getting harder. They would go to the supermarket, things were more expensive, and they started to question, what can I expect in retirement? And I think no matter you're thinking about retirement or not, I think everyone has felt that strain, that emotional strain of pricing and wondering where the economy was going to take them.
Mm-hmm. And when you hear these fears and these stories and these concerns, are you validating them? What is your response to someone who rightfully has these concerns and fears?
When it comes to purchasing power and the dollar, you
Mhm.
mentioned I've been doing this for 4 decades. So,
Yeah.
I mean, from the very beginning of my career, you know, in college, back when I was 19 years old studying currency. And so, for more than 4 decades, I know that currency you keep printing and currency keeps buying less. And so the what is the alternative to that? How do you protect yourself on that? And what Americans are, they're all in paper assets. They're everything they have is paper, and paper is promises. And I don't want to exasperate fear, but if you just look at 2021 to today, if someone took approximately $2,000, and a lot of people who are saving for retirement don't want to take risks, they worry about the market. But if they took that $2,000 and put it into a bank account at 3% a year, they would be at about $2,300 today.
Yeah.
Now, with the 3%, but through inflation, so it'd look on paper that they had more money, but through inflation, it would have the buying power of about $1,900. So, what looks on paper that you have more money, you feel it in your real life. And that's where the problem comes into play. And when you go through the math with people and they understand what it means that their money isn't keeping up with the reality of purchasing power, that's not exasperating fear. That's reality. And the question is, how do you offset that? And
Mhm.
how much, because the more money you chase, the bigger yield, the more risk you are and of downsides in market conditions. And so how does someone manage needing to make more and worried about risk? These are difficult
Mhm.
questions.
Mhm. Yeah, I think you're quoted for saying that inflation is not just a number, it's something that people live. What do you mean by that?
Well, I mean that in a few different senses. One is, the only thing that matters in your life is not how many dollars you have. It's how many dollars, what those dollars buy. That's the only thing that matters. So if you have
Okay.
$1 million and it buys one slice of pizza, it doesn't matter that you have $1 million. So it's like, what is your money doing? That's what counts in the real world. And when we look at the inflationary effect, that's where you're going to really live. You're not going to really live in the dollar bills. You're going to live in what those dollar bills buy you. So when you look at your earnings, what inflation does, and what the dirty little secret of inflation is, it's a hidden tax. If you earn $100, government, let's say, charges you 25% tax. They reduced your tax, everything else, you feel good, 25% seems reasonable.
Mhm.
That means you have $75 to go out into the world and buy things. But if that $75 only buys $50 of goods and services that it used to buy when you earned that $75, the government could have charged you 50% tax and it would have been the same thing and gave you $50 with no inflation. So
Mhm.
at the end of the day, our tax rate is much higher than what we think it is because of the government spending and because of the debt, $39 trillion in debt, because of that, your dollars don't buy as much as they did when you earned them. That's a tax. And now today, the administration is saying they want to spend $1.5 trillion on defense. I don't know if we need it or not. I'm not here to make subjective opinions on budgets and what we should or shouldn't spend money on. But the bottom line is this type of government spending with no idea of what a balanced budget is anymore. We've never even heard that discussion in 20 years. I've never heard anyone talk about balancing the budget. Means that your money is going to constantly buy less.
Mm, okay. So that's what I was trying to understand is, I've heard inflation has been something that we can almost expect, right? Market dips up and down is also something that we should expect as investors. But this does feel like more than just a bad stretch in the market. So, what are the forces at play that make this time actually unique? Is it the government spending and this balancing of the budget that feels novel from the work that you're doing and what you've heard and experienced?
The government for a very long time is reckless in its spending. Since
Okay.
2000, since the turn of this century, imagine this, and it doesn't matter about party. Every single president has outspent the president before them, regardless of party.
Wow.
So yeah, it's and if you look at the graph, it just goes up, up, up with each one. So one president likes to point at the other party or this party. To me, it's a uni government. They just all do the same thing. They spend and spend and spend. And when it comes to the things they want to spend money on, they always find the money for it. But if it's not coming out of our taxes, then they're printing it and going into debt. And
Mm,
that's making our money worth less and less. So
mm.
government spending, I think, is the culprit behind everything.
Mhm. Okay, and it sounds like, I mean, you have frontline access to these investors, people who are getting ready for retirement. Are they waking up to this realization? Are they really starting to feel this pressure and starting to look at alternatives? I'd like us to segue into the so what, you know? What do we do about this? We know there's alternatives like gold and silver. Is that the next obvious step when something like this happens?
When you look at the central banks, and the
Mhm.
central banks for the first time since 1996 now carry more gold than US Treasuries.
Okay.
And they have been on a buying spree for 5, 6 years in a row, buying 1,000 tons, 900 tons, 1,000 tons, 850 tons of gold every single year now. And so they're loading up on gold and trying to deleverage from their dependence on US Treasuries. That is a big sign that the rest of the world is saying the dollar isn't what it used to be, and it's not what we want to carry in our reserves anymore. We want to get out of that. We want to be into something that has real value. Now, I work for a gold and silver company, so I don't want to be tilted in this conversation and think, okay, the answer to everything is gold and silver. But the counterbalance is when you really look at your portfolio, you're diversified in different areas of paper. So I'm not telling people to sell their house or sell all their stocks and all their bonds and take every dollar they have and go buy gold and silver because that's the only way you're going to be safe. On the other hand, should you be 100% in paper or should you be diversified into an asset in that same sense that I just gave you since 2021, that $2,000 was equivalent to about 1 ounce of gold. It was $1,910 in the beginning of 2021, is now $4,500. Through the inflationary effect, it has about $3,800 in buying power today versus the $2,000 in a bank account that has about $1,800 in buying power today. So I think gold and silver is a good counterbalance as a portion of someone's portfolio to hedge and to be in a position where you're not 100% dependent on dollars and paper assets. And it's more than diversifying assets. I like to think of it as diversifying your trust. If your trust is all in the big banks, financial institutions, and governments, your trust is in one place no matter what paper asset you're in. It's those three entities are controlling it. So I
Mm.
want to put my trust in something that doesn't attach to those three entities. And that's why I like gold and silver. I've been buying it my whole life. And my family is very lucky that I have been. So,
No kidding, especially right now. Well,
yeah.
I appreciate you acknowledging your bias in this conversation. It is, of course, one of the reasons we did want to speak with you, though, because during this time, people are looking to alternative assets and are thinking about a whole new level of diversification. And I love that you said diversification of trust. So when we think about gold and silver, what role can that play in a conversation around someone's retirement?
It can play a major role because where dollars, gold and silver has an adverse relationship with the dollar. As the dollar buys less, I always tell people don't think of gold and silver going up. Think about your dollar going down, and therefore it takes more dollars to buy the same amount of gold and silver.
Hmm.
So, and that's what's important. When I ask people one basic question, I say, Do you believe the dollar is going to buy you less next year, the year after that, 5 years from now, 10 years from now? Never met anyone who said, no, I think the dollar is going to buy me more. With the same breath that you say the dollar is going to buy me less, you are inversely saying gold and silver are going to go up in value.
Hmm. So they have a directly inverse relationship. That's interesting. And then when you communicate that to somebody, how do they respond? If that's the next logical decision, why aren't more people, I guess, pursuing this path?
Not enough people are. Americans are definitely underinvested in physical gold and silver. And I
Mhm.
think it comes down to a few different elements. One is the majority of investors have most of their savings in retirement accounts because a lot of them don't know how to save. So that automatic taking out of your check every week is where a lot of people accumulated wealth. When they do that, they get three options. They can be conservative, moderate, or aggressive. They don't really pick particular stocks or particular things. So a financial institution and advisor is doing all their investing, their whole working life, and they've never done something on their own. They've never taken action where they've moved money and bought an asset. So that in itself, they have to overcome that and say, I need
Mm.
to make a decision for myself when they've never really been active in investing. Conversely
Mhm.
to that, the entities that control all that money work under assets under management, meaning they get percentages every year, no matter you make or lose money, no matter how much, they get their percentages. And those
Mhm.
advisors are always telling you that gold and silver are they don't produce any yield. They're not a good investment. Don't do that. So one, they've never invested on their own. Two, all they've ever heard is gold and silver is not good. And so when you combine that, when people start thinking, and hearing about gold and silver, they have a lot of negative baggage, and they have a lot of negative baggage about selling their paper assets, moving it over to something else, and buying gold and silver. That's why
Mhm.
in the company I work for, Augusta Precious Metals, we focus on education. And that's really how we try to get people from point A to point B is give them a lot of education. We think an educated customer is our best customer. And we want people to really understand what's happening in the paper markets, what's happening with gold and silver, how they can make those moves safely and easily and get themselves diversified with not just paper assets.
Mhm. Well, let's talk about that for a second because I think what you really made clear is the type of person who isn't doing this, it's almost like they don't trust themselves, right? They've never trusted themselves to pick a stock, to choose an asset, to actually do that work. And they just, I'll trust the experts, right? And so if someone is going to change that narrative for the first time or trust us, for example, in this conversation, what do they need to understand first before they even make a decision to maybe move and reallocate some of their assets? Or maybe they have some extra disposable income that they want to add into gold and silver and bring that as an additional level to their portfolio. What would we educate them about first?
First is a very basic concept. Nobody is going to care about your retirement as much as you do. Number
Mm,
one, no bank, no financial advisor, no financial institution, nobody's going to care as much as you do. And you have to care. And by caring, it means, you have to get education. You have to understand more. And what's interesting to me is people spend 40, 50, 60 hours a week earning money for decades. All that time, they'll go to college, they'll become an engineer, they'll get a career, become a school teacher. Nothing comes easy. Policeman, fireman, nothing comes easy. A lot of work, a lot of
yep.
time. Those same people, all those hours, all those decades, how many financial books have they read? How much time have they ever invested in learning something about their finances where they just advocate all the power of everything they've done in their career to someone else? Wouldn't
Hmm.
it be wise to learn a little bit more, especially at this stage? Are you getting what you expected to get? Is the government really taking care of you the way that you hoped they would? Will you be able to meet your health expenses? Will you be able to live the retirement life you want? Are you going to sit back and hope, because hope is not a plan, or are you going to start taking some action and start steering your own life to some degree? Because if you don't, at the end of the day, the only person you can really blame is yourself at that point.
Yeah. And I think you're so right. We as humans, we know how to learn. We know how to do hard things. So we already have the skills of learning something that is unknown and feeling confident in this new skill after putting in the work. But I think when it comes to money, there's just so many blockers. So it's amazing that organizations like Augusta are really taking an education first perspective if you're going to encourage people to spend their money in a certain way. And I know there's other organizations like yours. So tell us a little bit about what makes you different, specifically the educational component or anything else you want to add.
One of the things that makes us different from not only every other gold company, but from the actual financial institutions themselves is that no one at Augusta is working on a commission. They're all salaried educators. We pay everyone a great salary to help people understand everything they need to understand through every decision, including the actual purchase of gold and silver. The educator on that is, again, a salaried employee. When you look at your financial institutions, the financial advisors work under assets under management, meaning they get a percentage for the money you move over. And when they call themselves financial advisors, I've always had a little bit of a pushback on that, because the only advice they're really giving is on the assets that they're selling, stocks and bonds. They're not giving you advice on real estate or private investments or anything else. They're only giving you advice on the assets that they sell and make money on.
Hmm.
Sounds like they are salespeople, who are selling a product and advising on the products that they're selling. Same with other gold companies, the people you talk to, and that's what makes buying gold and silver can be very scary. You call a gold company, it's a very experienced salesperson, and what makes Augusta extremely different than all of these organizations is everyone's paid to give you the education to help you understand everything so that you can make your best decision. And that's how we operate.
Hmm. Can I ask how you make money then? What's different about your revenue model then that would make somebody feel a bit more confident in terms of the trust piece that we've been discussing so far?
Well, we're transparent about the difference between our what we're selling something for and what we're buying them back for, and the spreads involved, and we make our money on the difference. Obviously, I mean, but when you buy
Hmm.
an Apple phone or any product, everyone makes their money on the difference between what they're selling an asset, an item for, and what it costs them to deliver that product. We're the same. I mean, we're a making money. You want an institution that you're investing with to be making money,
Yeah.
because that's what gives them longevity, and that's what gives you the basis of a long-term relationship. We give lifetime support. So we're not saying that we're in this not making money, but the
Hmm.
difference is the people that you're working with make the same amount of money no matter you decide to invest or not. And they're not out there saying, oh, they're not like dependent on you. So they can be very relaxed in their approach to you, really give you the education, really lay back and let you make your decisions. And if you read our reviews, I mean, it's person after person after person saying this was such a great experience, such a great environment. They really taught me everything. I could feel comfortable in the process. And that makes us extremely different than these other entities.
Yeah. And we've experienced that at consumers, even in something so simple as going into the shopping mall, right? You walk into one store and you can tell what stores the employees are on 100% commission. There's a completely different energy in the space. And you can often feel that pressure and feel that urgency that they really need you to make a sale with them versus another store where those economics aren't in play. And I think we've all had that experience of just feeling a lot more relaxed in the energy of the latter. So I'm glad you differentiated that for us. And I've seen a few resources come up on the screen where people can learn more about working with Augusta. But whether they work with you or with a different organization in order to pursue gold and silver or just making a move with their retirement, what are the things that we should be asking ourselves first before we even do something as potentially life-changing as, change up our portfolio?
Should ask yourself if the portfolio that you have currently is putting you in a risk position that you can't afford. Is
Okay.
it giving you the returns that are overcoming inflation? And is it a long-term plan that's going to get you to where you want to be? Are you too much concentrated in one investment versus being diversified? So I think it's
Mm,
very, very important to be diversified. I mean, you can see right now, the tech sector is getting beat up. The war is on. Oil is way up. A lot of risk is happening right now. And we're
mhm,
going to start seeing higher inflation as the oil prices roll through the economy. You're going to see higher
mhm,
food prices. Are you prepared for shocks? We're going through an economic shock right now. We're just at the beginning of it, and
mm,
it's going to mount. The pressure is going to mount. Gas prices are going to continue to rise. Inflation. Bloomberg terminal just came out and said inflation is going to top 5% by the end of the year. We're going back in the direction that we left during COVID.
mhm,
And finally, all these years later, we started to see it come down. Now we're going back up. The Federal Reserve's in a box. In 1979, Paul Volcker increased interest rates to almost 20% to kill inflation. But when he did that, our national debt was under $1 trillion. And now our national debt's $39 trillion. Our interest payments are over $1 trillion a year. $1 trillion a year that doesn't go into education, healthcare, bridges, infrastructure. So if they raise interest rates, it will kill the economy. If they don't raise interest rates, inflation will run out of control. So the world is different. The Federal Reserve doesn't really have the tools that used to be effective to really help the economy. And things are more out of control than I think consumers realize right now. And so I think the dollar is in a lot of trouble. Long term, a lot of trouble. One of the things when you initiate all these tariffs and wars and things of that nature, again, I'm not a politician. I'm just looking at it economically. But one of the things that finances all this debt is selling U.S. treasuries. Well, if you disenfranchise the people who are buying your U.S. treasuries, who are you going to sell them to? How are you going to finance everything? Then that puts all the pressure on the Federal Reserve to print more and print more and print more. This is not a simple situation. If people are sitting back thinking everything is just going to work out the way it always worked out, or they just have this, again, hope is not a plan. Things
mhm.
are moving in a direction, Sam, it's not even fun to talk about. But I'm very experienced in this. I really can see what's happening from a greater understanding than the American consumer understands. And if they think it was painful up until now, there's more pain ahead of us. Guarantee you that.
Hmm. Scary. Honestly, it really is. I appreciate you giving us specific ways that we can almost do an audit for our own situation before deciding to make a change. You spoke about, does our returns on our assets, are they higher than inflation? So just to equip someone even further, like, are there numbers as benchmarks that we should be considering in terms of what we expect inflation to look like and therefore what returns we need? You also talked a little bit about like diversification. You specifically mentioned tech. Like, is there any rule of thumb in terms of the number of diversified industries? Like, how could we just allow someone to audit themselves as like a first step before feeling like, again, they need to talk to somebody else and get support?
Cookie cutter examples are
Yeah.
dangerous because
Okay.
everyone's situation is different. So
Yes.
I don't like to go into cookie cutters, and you'll see a lot of cookie cutters. They'll say, put 10% into gold and silver. Why 10%? Could be you need 20, could be you need 30. It really depends on your circumstance. For instance, the less savings you have versus someone who has more savings, higher expenses versus somebody who has lower expenses, more funds coming in from pension plans or Social Security versus someone who doesn't have a pension. There are like a lot of different aspects to it. And
Hmm.
listen, there are financial advisors who are just advisors who aren't selling any products, who really help somebody go over their finances without selling anything. They're just more of an accounting and help you organize it. There's a lot of information out there. There are a lot of websites, retirement calculators, inflation calculators, really trying to understand what your money is going to do for you over the next 10, 20, 30 years. So there are a lot of tools out there. And so not knowing someone's situation, I wouldn't want someone to listen to me and then say, oh, I got to put 10% here or 5% there. It could be the wrong approach for them. The most important thing is you don't sit back. Get education. Come to Augusta, get education other places. Don't just think what has worked before is going to work for you going forward, because economies and the dollar and what's going on in the world is changing. And
Hmm.
like all things, at one point you didn't have a cell phone, then you did. You didn't have a smartphone, then you did. It's like,
Hmm.
life changes, economies changes. We have a lot of things happen with artificial intelligence. Jobs are going to change. Robotics are going to come in. The world is changing, and you can't depend on what you used to do to carry you through the future. And that's what's important, is you get involved in what's going on in your finances and take an active role in it.
Hmm. Well, I appreciate you challenging that and not wanting to share any cookie cutter advice, as you mentioned, because there are so many factors at play. As you just mentioned, there's so many different things to consider, but it sounds like what I'm hearing is no matter what, having a mindset that change is coming, having a mindset that you're going to have to do something new in order to succeed or at least maintain your level of success, and that education and resources and talking to experts is going to be more important than ever. So, if someone got to the end of this conversation and is still feeling a bit uneasy, is there any last pieces of advice that you'd want to give them as those next steps that they should be taking?
Well, if you're interested in gold and silver, I would contact Augusta Precious Metals. I would go to one of our web conferences and get the education on that to find out how that might help you offset some of the inflationary risks that your retirement might be facing. I would audit myself as far as, if you're looking at retirement, what is your health cost going to be and what is your coverage going to be? 90% of people's medical expense happens in the last 10 years of their life, and they're not prepared for it. Things like that matter because maybe you've been healthy your whole life and you don't think about that, and then 75, 80 comes in, life changes. Are you prepared for that? What does retirement mean to you? And what type of lifestyle do you want to have in your retirement? I know that all the commercials and financial institutions show you the couple walking happily on the beach looking at a sunset. Um, that might not happen for so many people. So, unless they get involved in their finances. So, my number one point is get involved, because you don't want your life to happen to you. You want to happen to your life. And that's where it's going to make the big difference for you.
Mm, I love that. I think that's the perfect place to end. We have shown some resources up on the screen. We're going to include links to all of this in the comments in the show notes for this episode. So please take advantage of these resources that Devlyn is sharing. They're creating them for you. Devlyn, we appreciate you being here. You've really broken it down in a way that regular people like me and everyday investors can actually understand. And I think the biggest thing I've heard is change is coming, and get prepared. And the best way to prepare yourself is to learn and to educate and to be open to trying something new. So hopefully for those listening, you got that message too and are going to download Augusta Precious Metals free gold and silver guide in the video description right now, also on our show notes at IncomeInsider.org. If you found this helpful, as always, hit that like button, subscribe, and we'll see you in the next episode.